Hello students, welcome back to the video lecture series of indirect taxation. Today we are going to solve problems on module 4, that is input tax credit. You can refer the screen for the problem. Nargis Agro Traders located at Jaipur and engaged in the business as retail traders provides the following details of its inward and outward supplies made during the month of July 2019. Items they have given: sugar candies, chocolate bars, wafers, pockets, biscuits. Amount in rupees, inward supply and outward supply given. The rate of tax under IGST on the items are 5%, 12%, 12% and 18% respectively. That means from sugar to biscuits 5% to 18%. You are required to calculate the amount of IGST payable and the date by which the due tax is to be paid by the trader for the month of July 2019 after availing the input credit. Okay, so in this problem you have to note that since GST statutes requires that GST to be charged separately, hence all prices are taken as X tax values. So it is assumed that both purchases and sales are interstate transaction. Between the states it is going to happen. So for that reason we are applying IGST and we need to calculate outward tax payable by Nargis Agro Traders on the sales during the July 2019 and inward that is calculation of input tax available on inward supplies we need to find out separately. Okay, take down. Calculation of outward tax payable by Nargis Agro Traders on sale during July 2019. So item 4 columns, item value in rupees, rate of tax, then tax in rupees. So first one, sugar candies, the 1,20,000 is the outward tax, outward supply 1,20,000. On the tax rate is 5%. 1,20,000 into 5% gives you 6,000. Chocolate bars, outward supply is 1 lakh. 12% is the rate of tax. 12,000 is the tax. Wafers packets 60,000. 12%. So 12% of 60,000 is 7,200. Biscuits 50,000 is the outward supply. 18% is the tax rate. 9,000 is the total tax. So total of this gives you 34,200. See, calculation of outward tax payable by Nargis Agro Traders on sale during this July 2019 is 34,200. Next, we need to find out the input tax available in inward supplies for sugar candies. Total inward supplies is 1 lakh. Rate of tax is 5%. 5% of 1 lakh is 5,000. Chocolate bars. Total inward supplies is 80,000. 12% is the rate of tax. 12% into 80,000, 9,600. Wafers packets. Total inward supply is 75,000. Rate of tax is 12%. 12% of 75,000 is 9,000. Biscuits. Total inward supplies is 50,000. 18% is the rate of tax. 9,000 is the amount of 18% into 50,000 gives you 9,000. So total input tax credit so total of this you need to add. The answer is 32,600. So next you need to find out the total tax payable through the output supplies is rupees 34,200. Okay. Then mode of payment what they have made is by debiting electronic credit ledger, rupees 32,600. So by debiting the remaining amount through electronic cash ledger. See, the difference between total tax payable is 34,200. How they made the payment means by debiting the electronic credit ledger as 32,600 through the inward supplies. Difference between 34,200 minus 32,600 is rupees 1,600 is debited through the electronic cash ledger. So due date for payment of tax shall be 20th of August 2019. See, as I said in the last problem, due date of the tax shall be the next month of or succeeding month. 20th is the date. So July 2019 the supply is made and the due date for the payment of tax is 20th of August 2019. Okay, that's all. Thank you.